Boom. Folks, we're live. Welcome to the Labor Day edition of Sunday Night Futures Live, now named Monday Night Futures Live for the time being. Tonight we're going to go over the futures action. I was watching it earlier. By and large, the futures were up, thin volume, obviously. We're going to take a look at futures now. We're also going to talk about what we normally do on a Sunday night. That is the valuation of the market as measured by the Buffett indicator and by the Shiller PE ratio indicator. The Buffett indicator is just screaming. We hit a new milestone this week. It really jacked up last week by a magnitude that it's beyond belief, to be honest with you. We're going to go over some headlines that came out over the weekend that could cause a threat to the market. And we're going to talk about economic data. We're going to talk about chart requests, those that members requested, those that you're requesting. John Spencer, thank you, sir. Thank you for the super chat. And first, let's begin. Oh, yeah, Larry, thank you for reminding me. I did a special video on DocuSign, very bullish on DocuSign. I went over the fundamentals, went over the institutional accumulation, as well as the charts. So please, it's on YouTube and on the website if you're watching it there. Go check it out when you get a chance. And very, very bullish chart setup. Folks, before we begin, I want to talk to you about TrendSpider, our sponsor, 40% discount code, their Labor Day sale. Don't use my discount code. They're offering a special benefit. Use the link below. It'll take you over to the website. Take advantage of it. It ends, I guess, today. So don't settle for ordinary trading software. Automate your grunt work, speed up your technical analysis, and also improve your accuracy. Reduce costly analytical mistakes by timing your trades with precision by using their trade alerts. Find winning chart setups with their scanners. Head on over. Again, use that link below. Explore the product. They have a demo tour. They have a 7-day free trial offer. I believe in it so much, I give it away to our silver and gold level members. It's included in our membership. So TrendSpider, go check it out. Let's take a look at the first. Say hello to people. Abel, hello, sir. I did have a good weekend. Very good. Thank you, sir. Hope you did too. Sina, good evening, Bob. Is that the right time or did I have the wrong time up there? Sorry if I did. Oh, I did have the wrong time. My apologies. Look at that. It's just 5 o'clock. My bad. I'm not sure if, you know what, Danny, I saw your question after hours, after I logged off, and I went through the comments. So, uranium, we'll go over the chart of URA. I had been bullish on uranium in the past. I haven't looked at it in a while, so we'll take a look at it. And McNeil, hello, sir. Tommy, hello. John Spencer, hello. Larry, of course, hello. RKLB. And we have Tom Liu, hello. WFC. And, okay, let's do this. Let's go to the opening futures action. I'm going to begin with gold because gold, let's go to a 4-hour time frame. Gold did not have a good day today, but I think that we're setting up for a continuation breakout here on gold. The dollar saw some strength early on. It did rebound from that very, very poor showing, that drubbing that it took, not just on Friday, the entire week last week. But gold, we're doing a stair-step higher here. So while we are down on the session, I think that we are going to break out on gold. And if you take a look at the monthly chart of gold, we are now up on the month, and we are flirting with a breakout of a huge, huge cup with handle formation. So gold looking very good. We had a great day on Friday. It was outstanding. So gold looking very good here, despite the fact that it's down. It's consolidating gains. What were we up? Around $23 on Friday. So the path of least resistance is beginning beginning to change to the upside for gold. Let's take a look at silver. Silver also, we're long of silver. It was a great week last week. Very strong day on Friday. We're consolidating gains. We're going to have a lot of resistance at the 25 mark on 20. That's spot price on spot gold, spot silver. Sorry. Taking a look at the U.S. dollar. The dollar was up earlier. It is now down slightly. I just dropped my pen. So, am I concerned about a possible higher low here? Sure. Sure, why not? So we'll see whether or not the dollar can break out here. I doubt it. I really, really doubt it. Friday was an interesting day in that you saw yields jack up higher, which I didn't expect. But I've warned for a while, you'll know that this market may be in trouble when you see yields moving up higher and the dollar moving lower. Basically, bonds got sold, dollar got sold. That's a loss of confidence. And you don't, being an American, you don't want to see that continue. I mean, it's very, very bad for interest rates here in the United States. It doesn't necessarily mean that stocks are going to crash simply because you have rates that stabilize, maybe move up higher slightly. But if you see a dramatic rise in yields, I mean, a rapid fire increase in yields, especially if they move up towards that 2% mark, I mean, that's still historically low, but this market cannot take it anymore. They cannot take high yields, what they perceive to be high yields, even though they're historically low. They need low yields. So, especially tech stocks. So, the dollar down at current, maybe we're putting in a higher low here, RSI, possible higher low. So, we're not going to get all cocky about our commodity trades just yet. We want to see that dollar break down below 88 on the Dixie, 88.15 on the Dixie. And that's a far way away. Let's take a quick peek at crude prices, sticking with commodities for a moment. Crude is down. They need crude to rally. So if crude cannot stabilize here and move up higher, expect some sort of a false flag event over in the Middle East. Don't put it past them. They need oil to stay up higher. Home heating oil. And by keeping oil up higher, the energy stocks do well. Forget about home heating oil. Copper's looking really good here. Higher lows. Do we break out? I think that we could quite very well break out here on copper. I know a few of you are out there that like to trade copper. And if you take a look at copper on a weekly time frame, I mean, this is a monster chart. Last week, let's go back here to the week of the 16th, where we closed down, we bounced off of critical support, not one support level, but two. Basically, it was a retest of a breakout point. Then the following week, an inside bar, no new high, no new low. Last week, we had a doji star formation, a sign of indecision. This week, we're down incrementally, we're barely down. It looks as though we are getting ready for liftoff on copper. Copper looking very, very good here as a long trade. Going back 4-hour time frame. Let's take a look at equities. We'll begin with the S&P 500. It was up earlier. It remains up. A little bit of pressure here. We were higher. Did we take out this low? Low 45, 42.50. Not yet. Let's create an alert here. Let's see if we break down to the lower lows, bar over bar. Not that it means all that much. It just satisfies a curiosity of whether or not we have a lot of selling pressure or accumulation here. Now, we're entering a month, where we've already been in the month, where seasonality isn't necessarily the best. It depends upon the time frame that you look at. If you go back, 20 years, it differs from the past 10 years. I think that this time, I hate when people say this time it's different, but let's face it, this time it's different. You have the Federal Reserve out there. Okay, let's take a look at, in short, before I leave this, I don't think there's any, we just broke. That alert just fired off. Let's take a quick peek and see how much momentum is behind it. Sorry about that noise. I hate that noise. Let's see how much momentum is here. This is a 15-minute chart now. Not seeing a lot behind that break to a lower low. 5-minute chart. Nothing happening here. So, nothing behind it. No real selling. So, there's no doubt that I love to short. That being said, and that's why I look at these charts as looking for that opportunity, that crack in the dam, looking for that opportunity to add more to a short position. Small mid caps looking good here. This is only a 5-minute chart though. Let's pull back. But we go into the new week expecting that we're going to get higher highs on the market. We're still net long of the market. We were stopped out of Riot Blockchain last week. We opened up a small position. It didn't work. We got stopped out. We entered a new trade. Our inflation portfolio is pretty much complete. We have exposure to cryptocurrency. We have exposure to gold, silver, the miners, oil. Nat gas is probably going to be a next play. I love natural gas, but it's a little bit ahead of itself right now. So mid caps flat on the sessions with a bias to the upside. The Russell 2000 flat. So 4-hour chart, so not insignificant. So last week we broke down on the small caps on a 4-hour time frame. And we are at current potentially putting in a lower high on the small caps. In and of itself, it doesn't matter unless, of course, we begin to take out lower lows. Until that happens, if that happens, all we're in right now is a consolidation. And another stock, not that it's another stock, this is an index, a stock that is a leadership name that displayed the same price action as what you saw on Friday with with the small caps was none other than the Pimp Mac Daddy of the Trip Qs, and that was Microsoft. Microsoft, while the Qs were up on the day on Friday, Microsoft 4-hour time frame broke the lower band of support. I think it was Apple that was really driving the ship. Shit. Sorry about that. Yeah, Apple was really, really strong last week. This is the number 2 component of the Trip Qs. And in the final minutes of trade, Microsoft, it had been up most of the day. And then the sellers moved in. Lower high, broke to new lower lows, and then closed pretty weak on the day. Falcon, thank you, sir, for the super chat. Hey, Bob, have a significant position in AEHR. Can you add to the list? Of course. You got it. So just keep an eye on the Qs, because what I found interesting was that the indexes, by and large, the large caps, the cyclicals, the banks, were all weak on Friday with rising yields, yet tech was up. Normally, when you get rising yields, you see weakness in tech and you see a bit of strength in the cyclical names, especially the banks. It was the exact opposite. So let's take a look at the Nasdaq 100. We are up just shy of 1/3 of a percentage point on the session. Not much going on here. Light volume. Very, very light volume. No great shock. This is why I didn't want to do this last night. The futures were open last night. So if you think that volume tonight is light, last night was apocalyptically light. What else do we have here? Nat gas. That's what I wanted to go over. Natural gas, yeah, it's so extended right now. Here's nat gas on a monthly time frame. We caught this breakout back here, and we sold some options against natural gas, Boyle, the ETF. But man, we'd like to get a pullback here on natural gas. We're probably going to get it fairly soon. So nat gas longer term looking very, very positive. All right, I think that we touched upon everything. Oh, you know what we didn't go over? Bonds. Now, bonds were dropping again. The 10-year bond was dropping today, and yields moving up higher. So we continue to see that anomaly where you're seeing the Nasdaq 100 move up higher with rising yields. And again, you could have inverse correlations that don't work one day, but rarely do they put together a back-to-back string of days or weeks where that correlation breaks, where you're going to see tech rally along with yields moving up higher. And that's exactly what you're seeing right now, is the 10-year Treasury note drop down, yet the Nasdaq 100 continues up higher. So we'll see how long that lasts. And this doesn't look healthy. Look at this rounding top, this lower high on the 10-year Treasury note. And if it's dropping, that means yields are rising. And at current, we've already taken out the lows of last Tuesday. Let's see if we break down to new lower lows here. All right, that was stupid. Okay, so we're good to go. All right, let's go on to some economic data that is actually, we're going to kick it off with the valuation of the market. Shiller PE ratio. Folks, I got to tell you, we have yet again put in a new higher high not seen since the bust of the dot-com crisis. I think that the conversation with regard to taper is done. I was listening to CNBC on Friday when we got that jobs data, and they were also surprised. They're going to put their foot on the gas pedal and increase bond purchases before they taper. So if they do that, stocks are going up higher until something breaks. I don't know what it's going to be. We're going to go through a couple of articles here. Maybe it'll be one of these items, a mixture of both. Maybe it's something that's not even on the horizon yet, not even on the radar screen yet, of a possibility of being that pin that busts this bubble. But I'm not going to be the least bit surprised if the Federal Reserve does increase bond purchases. We take out the dot-com highs on the Shiller PE ratio. I think it's entirely conceivable. So we're going higher here. It's shockingly overvalued, the S&P 500, and even more so overvalued is the market. When you use the Buffett indicator, I mean, I've been coming on here for, I don't know, well over a year talking about the Buffett indicator, and it usually fluctuates between a 2.9 and a 2.8 handle. That's the deviation beyond the historical trend line. This week it's different. I had expected a 3 handle. I didn't get that. I got a 3.1 standard deviation beyond historical trend. That is bananas. That is just off the charts. So, yeah, I catch a lot of flack sometimes for keeping hedges on my portfolio, but man, when this goes, my God. And what are they going to do? Cut rates? Buy more debt? I don't know. I don't know what the answer is going to be there. So watch the 10-year yield. You'll know when it's over, when the dollar is crashing and bonds are crashing along with it, and yields are spiking up higher. And headlines that came out over the weekend: Taiwan scrambles jets against renewed Chinese aerial incursion. They had about 19 aircraft that crossed over into Taiwan's airspace, one of them a nuclear-capable bomber. If not now, when? If you're the Chinese government, they smell blood in the water after what happened in Afghanistan. Nobody right now is going to have the appetite to work with us to form a new coalition. So I really, really worry about this topic. If not now, when? When? So major concern here. Keeping on the topic of China, there's no secret about what's been going on with Chinese stocks listed here in the United States. They have been getting hammered. Why? It's because if you buy these stocks, you have the CCP, which is your senior partner. Didi, Alibaba. Anybody heard from Jack Ma lately? So over the weekend, Evergrande bonds halted amid liquidation panic as contagion spreads to other Chinese junk. They are no longer eligible for collateral in the repo market. So the question then becomes, who has the counterparty risk to these bonds? U.S. banks, solely Chinese banks? We don't know. But this is a $300 billion fund. So it's going to be interesting to see how this one plays out. It's they're comparing it to Lehman. Could quite very well be. And if China goes, I've already showed you the chart of China's stock market had already rolled over and had been trading eerily for decades consistently with the S&P 500, yet the S&P 500 continues on with its trajectory higher, a complete and utter deviation. This is a headline that is freaking, it should freak everybody out. The French are protesting en masse. You have the Australians, the New Zealanders, mass lockdowns. Their civil rights, not that they're the same as here in America, have been pretty much trampled upon. They don't have any civil rights anymore. They have, in Australia, they literally have quarantine camps. And they're interviewing some guy today, or maybe it was over the weekend, where he's waiting for his food to be delivered. And it's just utter tyranny. And you're seeing this spread over and over again. And you know you got a problem when you have the Russians come out and say that they're not going to force any mandates on their citizens because they're a free country. So, you know, at some point in time, I was looking at the GDP numbers for Australia. Australia's GDP is just falling apart. And it's expected to go negative in the next couple of quarters. So I don't know what they hope to gain from doing this because their infection rates are skyrocketing. Everybody's locked down, yet their infection rates are skyrocketing. It's not working. It's not working. So what's the very definition of insanity? Is doing the same thing over and over again and expecting a different outcome. I don't know what the end game is here, but I'm trying to be careful. Like I'm on YouTube and they're very, very sensitive. I can be a bit of a conspiracy theorist and it doesn't end well. We have, as effective today, I believe, over 7 million lose unemployment benefits as pandemic programs expire. Now, this could be viewed as a good thing or a bad thing. The good thing, well, there's 10 million job openings out there, but the people that are sitting home that can collect, that are collecting these unemployment benefits, are they eligible? Are they qualified for these jobs that are open? We don't know. So, you know, maybe this will be a good thing, people going back to work, but hopefully there's a job for them. And going back to last Friday's jobs data, we had a horrible, horrible report. They expected a 725,000 number, a print of 725,000 new jobs created, actual 235,000 jobs. Yet, here is the cherry on the cake. And this is why you saw gold, silver, the miners rip. This is the reason why you saw the dollar and bonds get their face ripped off. Average hourly earnings not only meet expectations, it doubled expectations. So that's why you saw the dollar get hammered and bonds get walloped. Coming out this week, economic data. Not much. The Fed's Beige Book coming out Wednesday. I guess they pushed. They're going to have job openings. Yeah, okay, we knew about that. Consumer credit, not a biggie. Initial jobless claims, interesting. Producer price index, biggie. This is a measure of inflation at the producer level. The question then becomes, going into next week, are producers passing along inflation to the consumer? We get that number on Tuesday, the 14th. So not much in terms of economic data this week. I think the big number is going to be the PPI on Friday. So let's get to some chart requests. And folks, if you haven't already hit that like and subscribe button, please smash it. It helps me out with the YouTube algorithm. Jody, hello. Happy holiday to you too. Will, hello. No worries, brother. Thanks for being here. NY Jets, hello. All right. Let's do this. All right. We have first up, URA, uranium. I haven't looked at this chart in a while. I would have to say hold off on buying uranium because we hit resistance. This is my manually drawn line. You can see this beautiful breakout of this consolidation range using the heat map. The question is, on a pullback, where would it be safe to get involved? I think we need to go down to a weekly chart. Yeah, what a move last week. Monster move. Let's take the heat map off. Let's take this away. Okay. For those folks that are just joining in, we're using TrendSpider. Their automated technical analysis, 40% Labor Day sale. Use the link below. Don't use my discount code because you only get 30%. All right, so what I'd like to see here on URA is a pullback to this support level here. 2237 is the number. It was resistance back here. It was resistance back here. Now we're going to look for it to act as support. $22.37 is the number. We'll keep this active for a few weeks. 14 days of work. Good volume last week. Really, really good volume last week. You know, this could just be a speed bump, this resistance level. It's a commodity. Commodities have a tendency to rip your face off. So just simply because I drew a line here doesn't mean it can't break out above it. It just means that from a risk-reward perspective, do I want to go opening a position right here, right now, up and into monthly resistance? Probably not the best bet. What I would wait for is either a retest to the breakout point or wait for a breakout. I should say and/or. Because you can get a retracement back down to the support level. But then wait before you add more for a closing breakout above last week's highs. And we'll keep this active for a little bit longer than the last one because we're waiting for a breakout. And we're good to go. Daily chart. Yeah, so on Friday, you had a doji star formation. That's a sign of indecision. Yeah, so in short, what you interpreted to that candlestick body is that you have a tug of war between bulls and bears. So when you're at monthly resistance and you've come this far, this fast, especially when you're tapping the third standard deviation Bollinger Band, there's a probability that you're going to get a pullback, a rest, a pause, all good. And we know exactly where we would want to get involved with it, again, at around $22.37 per share. URA, longer term, looking very, very good. What else do we have? RKLB. John Spencer, I'm looking at Virgin on this pullback. I don't think that FCC, not FCC, the FAA, the FAA restriction is going to last all that long. So I think that's a bump in the road. All right, RKLB, Rocket Labs. This is the first I'm seeing this one. What a move. This is a monthly chart. Massive, massive move here. Ooh. This is a tough one. All right, so it's in fuego zone. You know, I can't buy it. I certainly wouldn't short it. But we closed out the week last week above the third standard deviation Bollinger Band. So in short, spare you the technicals. We're not supposed to be there. I'm loving our stochastics. So we need a retracement here. And to identify where we may want to get involved, it's best to use a daily chart. But before we leave the weekly chart, let's just memorialize this resistance level here at 12.29 per share. We closed out the day on Friday at 13.52. Daily chart. Yeah, so this to me is the best risk-reward entry point for RKLB. We'll keep a little bit of sensitivity on. And we'll keep this active. 14 days. Great volume on Thursday and Friday. And that number at support, again, is $12.29 per share. And once we hit that support level, I think it's game on. It's probably going up higher. Out of curiosity, is this in one of Kathy Woods' funds? Do you know that? Seems like the type that she would buy. WFC. Hey, Rick Roofing. How you doing, brother? Good to have you. All right. Okay, so interesting chart. I'm going to take the automated trend lines off here. We're going to talk about this for a moment because it matters. All right, so Wells Fargo is not my favorite bank. By far, it's not my favorite. If I had to buy a bank individually, it's going to be Morgan Stanley, Goldman Sachs, JP Morgan, one of them. Wells Fargo, they have so many skeletons in their closet. It's just not my favorite. I think there are better best of breeds names out there. That being said, let's talk technical analysis now. So we have yields which are going up higher. Let's bring up what happened last week. Here's the weekly chart of the 10-year yield. Boom. Closed up higher. Stokes are rising, but still down below 50. RSI is rising, down below 50. Why am I talking about the 10-year yield when you just asked about Wells Fargo? It matters because there's a correlation between the banks, especially the big money center banks, and the 10-year yield. As 10-year yield moves up higher, so goes normally the banks. Why? Net interest margins, a.k.a. NIM. So last week it didn't happen. I don't think that's going to last forever, where you're going to see a divergence of the stock market, which is going to continue to press up higher, yields moving up higher, yet the banks don't perform. I'm not buying that for a second. So at current, we're down on the month. This is a monthly chart. Now I'm going to bring back on the automated trend lines. And this is the time saver. Boom. So right now, the algorithm is picking off that 44.54 is a support level. I like that number. Here's the problem. We are trading slightly down below that mark on the month so far. So it's still very early in the month. By 9:35 tomorrow morning, we could be back above this number. So no big deal. I like the fact that we've been consolidating here for several months. Yeah, they tried to break it out back in August, and it was really rejected in a very, very big way. But yes, it's pulled back, but it hasn't broken down to new lower lows versus these prior support levels here. Yes, month over month, new lower lows. So lesson learned here, we are trading at historical support. We like that. And you can go back all the way back here to August of 2019. We've been here before. It's acted as support before. Weekly chart. Now the weekly chart, not pretty. So again, here are, if you were long of WFC shares and you had an alert set up at these resistance levels, you would have been able to scalp some profits here and might have been able to avoid this sell-off last week. So I don't like this weekly candlestick. It does not look good. We got lower highs on weekly Stokes. We do have support down here at the extreme lows of 41.77. You know, maybe support at 42.27 will hold. I'll do this. We can create an alert here. And we'll keep enough sensitivity on to capture potential support prior to hitting the extremes. WFC. Now, what I'm going to do here as well on this chart is I'm going to overlay. So our alert is set. So if we hit this support level here or down here, we're going to get it fired off. Actually, I made a mistake, actually. Will they let me correct it? Nah, it's grayed out. All right, I'll go back and fix it later. I wanted to have this fire off twice. Right now, it's only set for once, so that's my mistake. All right, so what I also want to do here on the weekly chart is overlay that monthly resistance level I showed you earlier that we're trading slightly below. And here we are. So I'm going to create an alert here. So basically what I've just done, I've overlaid on the weekly chart monthly resistance. And I want to know if we close above it. This is what I want to do on the other alert. I forgot. All right. So confirmations on daily time. Good. We're good to go here. There's a lot going on here. I'm going to share this chart with you. Okay. Moving on. That chart for WFC is in the box. AEHR. EHR. A here, test systems. Let's take these off. It's a pretty chart. Let's go to the monthly chart first to get a feel for where we've been. Man, a lot's happened here already. We're leaning up and into the third standard deviation Bollinger Band on a monthly time frame, and volume is dropping off, but it's still early in the month. Last month was very good volume still, relative to the moving average. Let's overlay some trend lines. See where we're at. I couldn't buy this right now. Weekly chart. You know, it looks as though it could probably still push up higher this week. Would I go chasing it? No, too much risk, not enough reward. We're already well beyond the breakout point, and to chase it would not be prudent. Let's overlay monthly chart on top of the weekly chart. It's a good-looking chart. I wouldn't be surprised if it continues up higher. Were I long? Would I sell? No, I'd probably use a trailing stop-loss order. I'd keep in mind that monthly trajectory. We're leaning into the third standard deviation Bollinger Band. But let the market take you out. Use a trailing stop loss. Would I initiate a new trade here? Probably not. Let's go to a daily chart. Yeah, definitely not. Because here, take a look at what's going on here on a daily time frame. We had a nice breakout. Above 763 per share, looking good, very good. The problem is that when you use the automated trend lines, we have resistance immediately above. That's why you saw the shares come off on Friday, off the highs. So just be careful. If you're looking for the best risk-reward entry point on this chart, 763 should be where you have your alert set. You know, give or take a nickel. If it holds, great. It probably will hold. It's a good-looking chart. And we're good to go. All right, let's see what else is in the comment section. How much time do we have here? We have some time left. Did I get everybody's requests? Did we do RKLB? Yeah, we did. That's Rocket Labs, right? Jerry, hey man, how you doing? Getting burgers for the boys at Whatever Burger, and it's pouring in San Antonio. Stay safe. You too, my friend. The best realtor in Texas, Jerry Pina. All right. BCH for Rick Roofing, BCH. Oh, I haven't looked at this one in a long time. This looks nice. This looks really, really nice. I like it. So here you can see, here's the value again of the automated trend lines. Click of a button. Boom. We had a nice long consolidation. We began putting in higher lows, rallied, hit resistance, pulled back, higher low. Now what we're doing on a monthly time frame is we are breaking out. Very, very nice chart. The Stokes are confirming the move up higher with higher lows. Weekly chart. Good price action last week. It broke out. I'm going to create an alert here. Banco de Chile. Let's keep a little bit of sensitivity on. BCH. I think I could easily retest support this coming week. And we're good to go. I like the chart. Daily chart. Daily chart. Sideways consolidation. This thing may just continue up higher. It's consolidating gains. I like it. Good looking stock. Good looking chart. Early stage breakout. Good stuff. Nothing not to like. ADA. ADA. Ooh. Ooh. Nice daily chart. Let's come back to that. Monthly chart. I don't have enough data here. Weekly chart. Not a lot of data. All right, so we sold off the highs of the week last week. $16 a share is support. It's where you want to put your stop, right below that mark. Looks like we're probably going to get a little bit more sideways consolidation this coming week, given the selling into resistance that we saw last week. Daily chart. Higher lows forming on a daily time frame. And you can see that the automated trend line is exactly where, almost exactly where, I have my manually drawn one. So it's looking really good. I think we may get a breakout as soon as this coming week. Good looking chart. ADAG. Is that the right chart? Oh, that's the wrong chart. Wrong chart for Jody. Anyway, ADAG is looking very good. My bad. What? It's defaulting to this. Is that the right company? ADAG. ADA is not coming up. Nope. Not coming up. Maybe you meant ADAG? All right. You're welcome, Falcon. Anytime, man. All right, let's circle back. Let's leave off with... oh! Sorry about that, Jody. I don't know all the cryptocurrencies. I don't. I'm not a big crypto guy. I like Coinbases and, the leaders, Ethereum. I like XRP. I think XRP is probably going to do well because I love the ability for large banks to move money around, and they already have the shoe dropped on them. No worries. No worries, Jody. All right. So let's circle back, take a look. We'll leave off with the futures, see if anything's changed. Bonds coming off their lows. So that probably means that we may have seen more fuel. Yeah. S&P 500, well, not much has changed here. Not the S&P. Nasdaq 100 is pretty much unchanged. See what the Russell's doing. Russell's struggling a bit. Basically flat on the session. S&Ps. Off session highs, but they're still up. The US dollar continues to consolidate. Let's see how that's impacting gold. Gold was down earlier. It remains down, pretty much flat. Silver, flat to down, consolidating gains here. Volatility index. The VIX broke out last week, folks. On a weekly time frame. We're putting in higher lows here. We broke out. This is Sunday night. and then broke back down. So not much volume here. But it did break out on a weekly time frame. Copper price is holding in there. Not much changing here. Light sweet crude. Wrong chart. Crude remains down. It's down over 0.75%. Let's take a look at how it closed out on a weekly time frame. We're holding support. OPEC loves the $70 range and higher. They don't want to see it below $70. All right. I think with that, folks, let's see if there are any comments. Technology keeps moving up higher as usual. Yeah, that is it. You know, I would love to be the guy that says it's time to short the market. I'm not that guy. I would love to. I mean, I think that the valuations are completely and utterly bananas, and the fact that the economy it's not doing well. So you got to wonder about what valuations are going to look like for when Q3 numbers are reported, because you have input costs going up a lot higher, and that's going to reduce the profitability of these companies if their costs are going up higher, especially if they can't pass those costs on to the consumer. But if they pass it on to the consumer buys less. So if we have valuations this high already, think about if on the Buffett indicator, GDP, which they moved lower, they continue to move Q3 GDP growth lower. So if they continue to lower that number, that Buffett indicator could explode higher, well beyond where it is right now, even if the stock market stayed the same and didn't move up higher, because it's a measure of the value of the stock market as a percentage of the GDP. So the GDP numbers are coming in a very, very big way, therefore making the cost of stocks as measured by the Buffett indicator a lot more expensive. Nobody's going to talk about this until after it all blows. And I'm not saying it's going to happen this week, this month, this year, maybe not even next year. My point is that the people on CNBC, they will not talk about valuations until they need a bogeyman to point their finger at. When everything goes haywire, and they're just going to say, well, the market has historically overvalued. They'll have Buffett come on. You buying stocks yet? Nope, not yet. And then it goes into correction. And then we'll see what the Federal Reserve and the federal government does. Until then, we're going to have the Federal Reserve is buying everything. The central banks are buying everything. And they can't let off the gas, because if they do, this house of cards comes crashing down. So it's going to be interesting. Going to be very interesting. That's why we have the inflation portfolio. Gold, silver, the miners, oil now, natural gas soon to be, and crypto. That's the game plan. All right, with that, folks, everybody have a profitable trading week and a great night. Thanks for joining in. Smash that like button. Don't forget about the 40% discount code on TrendSpider. Use the link below. Till tomorrow, have a great trading day and a great night. Be well.